Yo, what's up guys? This is Mr. Sombonyo. Welcome back to another video. Here this is episode 4 of the Sombonyo series, and here we are focusing on the market maker structure shift. So let's get into it. So the market opened here, true open, right here. That's our true open for the day. Right. Oh, by the way guys, I started a Telegram channel where I'll share daily trades and daily perspective and signals and all that for free. But it's not gonna be like my paid one. But anyway, guys, it's called Sombonyo Way. Search it on Telegram and you'll find it and join and share it with your friends too. So, guys, sorry for there's probably gonna be a lot of background noise in this video because there's a lot happening outside right now with some people. I don't know what's happening really outside. So, but I hope you can hear me properly and we get to business. So guys, here, right, when we are looking for setups with the market maker structure shift, I'll explain it the simplest way. So here we went up, we created a high, we came back down, we broke that high. For market maker structure shift to be confirmed, look, a high should be broken. 1. Sorry for that. Why are you doing that? Okay, 1. A high should be broken, right? 2. A low should be broken. Then, after the low is broken or taken, we will have a fair value gap here. Like, it'll leave a fair value gap, and that fair value gap is our entry. Let me get it precisely. Okay, it's fine like this. You get the idea. You enter here, and as you enter here, you look to have a stop loss right above that, and you take profit at the low. Okay, so the reason we look for it like this, guys, so here, wait, a high was created, we rallied up from here, a high was created, we went back down a bit and we broke the high. As soon as we break the high, for a confirmation to sell into our fair value gap with the market maker structure shift, it should break the low, and it broke the low here, and the gap it left here is called a fair value gap, where we look for our sell and to break the low. That's our take profit. So okay guys, I hope you get the idea of what, because I'll be just doing it on today's chart and go back to yesterday too and analyze it there too. So after that, the market right here, we broke the low. So let me mark the low here real quick. This is the low that we broke, right? So now we are changing the idea of it. Like, we're switching it around to look for buys, right? So as we are looking for buys in this situation right here, look at this. The market broke a low, right, that it created. After it broke the low that it created, it broke this low that it created. Cool. Then it broke a high. So after we broke this high, let's mark this high in blue. No, blue. We broke the high. We came back into a fair value gap right here. Fair value gap number 1. Fair value gap number 2. So in this situation, a lot of traders that trade like me get confused on what to do, because they never listen to our mentor properly. Let's get that properly and accurately. So okay, in these type of situations, you see in the second fair value gap, that's where people will be like, but there's 2, I don't know what to do. So here in this perspective, you wait for an entry in the first one, not this one, sorry. You wait for an entry in the first one. So what happens is that the market will go up, right? No, the market will go down. As it goes down here, it goes into the first one. It acts like it's violating the first one and goes into the second one. What you do is wait for it after going into the second one to come back into the first one, and that's where you take your trade and stop loss right here. Okay. After that happens, usually stop loss is here. Yes. After that happens, you take a trade as it comes back into the first fair value gap, and you target a high. So in this situation, let's see which high was being targeted. This one, right? The previous day's high. And people might say, but these are short trades. Obviously, if I show you this in a lower time frame and there's multiple of them happening, it's gonna be easier for you to get these in a higher time frame. So yes, you see how that happened. It broke a low, then it broke a high. After it broke the high, we came back into the fair value gap and bought. That's a market maker structure shift. That's the simplest thing on earth. It's not really difficult. Okay, so now here we broke. Let me go into yesterday's price, because these were the two best examples of it happening. This was clean. This one was a bit confusing for ones who don't really understand what's going on. So this was yesterday with all the CPI nonsense and all that. Okay, yesterday we did a market open. Tuesday. Market should open to 1 somewhere here. Okay. That's where the market opened. Let's just leave it like that. True open is where? Boom. True open. Boom, boom, boom. That's true open. Wait, am I tripping? Is that true open? Really? Wait a second. I want to see it. Let me remove this. The open was... Yeah, it is. It is true open. It is true open. Okay. So I told you above true open we what? We sell. Below true open we buy. Right? So we're about to get to the area how we got that CPI buy. We bounced off, because yesterday I said buy CPI without even analyzing it, because I saw what was going on already. So in this situation, okay, the market ranges. There's no really a setup here. But in this situation, okay, this low here was created, right? And as soon as this low is taken, let's look for an entry here. Oh yeah. So the market opened, it ranged. Range. So this one breaks all the lows. This candle right here. See this candle right here? Right. So after we break this low here, let me mark it. Low taken, low broken, whatever you wanna say. Okay. Sorry guys for that, my lines are not really that accurate. Okay. After this low is taken here, this candle goes up, ranges, a high is taken also here, as you can see. You might not notice that it's taken, but it is. It is. As this high is taken here, what happens after? Guess what happens? It comes back into what? It comes back into a fair value gap, right here. And where do we target? A high. Look at this high that we are targeting right here. So you take a trade from here, stop loss here, and you're targeting this high. You see, this is a 1:2 trade. It's in the lower time frames. That's why you're gonna see it like, no, it's nothing. But yeah, it is a lower time frame trade. So let's not even take it. It's a trade from here. Okay. These are like, I'm trying to show you multiple of them in lower time frames for you to understand. So, okay, right? We came back into a fair value gap. We went up. We broke the high. TP hit. Right. After that, the market obviously will come back. Range again. Range. So, in this situation, look at it like this. Right? We left a low here, right? Can you see it? A low was left here. After we left a low here, the market came back and broke it. It went up. We broke a low. Let's put it like that. We broke a low. Sorry, I have to remove this now. We broke this low here. Right? We left the low here and we came back and broke it. So let's put red. Okay. We broke the low. We went up. Our high that we have to break to look for an entry is right here. So at this high, what happens is that we look for it to be broken to find an entry. And in this whole situation right here, when it broke the high at this area, at this point it almost broke it, but came back down, then it rallied up again. Look where our entry comes from. Right here. Can you see it? And this is what I was speaking about not long ago, where there's two fair value gaps on how you enter. You see? And how would I have entered here? I would have entered here. Right here. Sorry guys, that's the wrong one. Right here. As it came back inside. What is going on? Do I keep on clicking the wrong one? Oh yeah, I do. And in this situation, we look to break this high, as you can see here. And stop loss right above, right below here. So guys, what had happened here? Let's focus. So first, let's focus on the first one. We broke a low here. After we broke this low over here, we broke a high, this high. We came back here. We broke this high here, right here. Sorry for that. Broke it here. We came back into a fair value gap. Boom. We were targeting this high. We got out, right? Then the market came back down, broke the low we created when we entered the fair value gap. After we broke that low, a low taken, we moved up again. It almost broke it here, but it came back down. Then boom, it broke the high here. So that's a confirmed market maker structure shift. So we will look for a buy entry when it comes back into a fair value gap that we may have left right here. So it's 1, 2. It touches the second one, but we will buy when it goes back into the first one and look to take profit right here. Boom, we're out. So a lot of you are wondering, let me not go into deep with this market maker structure shift too deep. So right here, I want to show you this real quick. Most of you are wondering, but you said above true open we sell, below true open we buy. I want to explain this whole thing quickly. Right. You see, I've been speaking about market maker structure shift this whole time, right? So here, look at this. It broke a what? A low. It broke a low. After that, it broke a high. What's that? Market maker structure shift. And with this, it already tells you, boom, we are up. This, guys, for you're wondering, why is this fair value gap not being filled? This is a runaway gap. This is called a runaway gap. For us to see higher prices, this should not be filled. If this is filled, we are going lower, it's going to break it. But at this point, this is a runaway gap. So, let's go into 5 minutes to understand it more. Right. So, here's the situation here. You see, the lows were taken here. This low was taken. And it was a what? This low taken, boom, up. You see, this was CPI. For those wondering, oh no, CPI, it's confusing on how to catch it. It's simple. CPI works on market maker structure shift. Honestly, I won't even lie to you. It works on that. We broke a low first, which showed you that, boom, a high was going to be broken. Simple as that. And if I want to explain it even more, it's like, let me make it too obvious now. You see, the market was ranging here. It created a high. So it created a high in these areas first. We broke the high. We came back. We did what? We broke the low. After breaking the low, boom, we went up. It's what I've been saying in my first 3 videos, that when we are going up, we'll break a high first, go back to the low, then boom, go up. So this is what is happening exactly here. When CPI came in, took the low, boom, went up. Market maker structure shift. It's as simple as that. Let's look at it on the 1 minute to get why it did exactly what it did right there. I love this type of things. So those that had buy limits here, 8. I'm telling you. Those that had buy limits here, they 8. They 8. Because this is a buy limit entry, boom. It wouldn't have taken you out. This is like, how many points is this? True open. This is, you see, not even 20 points. This wouldn't have been taken you out. You'd have bought so nicely here, boom, up there. But anyway, yeah, guys, I don't expect this to be a long video. This is just about market maker structure shifts. But this is on the 1 minute chart. I don't want to like do this for long. I want you to go back test what I'm saying on the 1 minute chart first, so that on episode 5 I continue showing it on the 15 minute, 30 minute and 1 hour. But for now, we'll keep this to a 20-minute video to keep the content short and for you to take down proper notes. Because PPI is coming today. And honestly, I'm going to tell you, when these things normally, like, what happens is that you look at it from NFP. I'm not going to lie. NFP. What did NFP? I don't remember what NFP did this month. Did it sell? It sold. Whatever. But you look at the day before. If the day before created a low, just know that, boom, we are creating a high. So, at this point, we created a high today. Just know that PPI is going to go down. That's my signal for the day. With PPI, it's going to sell. Because, yeah, it created a high last night. So, and also today. So, boom, we're going to sell. But anyway, guys, keep it moving. This is episode 4 of the Sombonyo series. I know, guys, like, if I know my content is boring, I'm not gonna lie. This type of content, ICT concepts are boring, but they are powerful, guys. So, in this video, we focused on market maker structure shift on the 1 minute chart, and I hope that gets a perspective for you. So, like, it gives you a perspective on the whole thing going on, because with episode 5 you're going to focus on the other time frames. This one we focused on the 1, because a lot of people are going to trade on the 1 minute time frame. I just showed them how to get the entry, and the exact same thing I used on the 1 minute time frame, go use it on the higher time frame. You'll see it works. But anyway, guys, we'll be back with episode 5 2 days from now. Keep it moving and keep on killing, guys. Thank you.